What is up, everybody? Welcome to Traders Nation. I just want to welcome everybody that's new and welcome everybody that's been part of our team for the past year or so, however long we've been open. And yeah, just welcome to everybody. This is kind of going to be the introduction to our company, our site, and just an introduction to all traders that are new pretty much to the Forex game and want to learn a little bit of something on what Forex actually is, okay? And kind of understand some of the terminology that's used in it and all that stuff. And this is also going to be the first video to our course, so you guys are already getting a sneak peek of to what's to come. Now, anyways, yeah, let's jump right into this, okay, guys? So what is Forex? Forex is just a foreign exchange, okay? It's kind of just an abbreviation. I believe that's what it's called. I think it's an abbreviation. But anyways, it's just a foreign exchange market, okay? It's a market where currencies are traded, okay? Kind of like stocks where you exchange trades with different companies and stuff like that. But in this case, we work with currencies, okay? Whether it's the euro, the USD, Japanese yen, whatever the case may be, okay? This market basically determines the exchange rates for the currencies all around the world. So when you do go to another country and you go to change your money at a kiosk or whatever the case may be, basically you're participating in that foreign exchange, okay? That's the foreign exchange right there. Now, a quick little fact, this market is literally the largest financial market in the world, okay? More than $5 trillion are traded every single day. So that makes it possible to make a killing day in and day out on this market. And that's what we're dedicating our lives to provide you guys with an extra source of income or potentially be able to quit your job and do this full time by learning and taking our course. So, currency pairs, okay? This is what we basically trade, okay? We can't buy or sell a single currency when it comes to trading the Forex market, okay? They have to be in a pair. And a pair is consisted of a base currency and a counter currency, okay? So here you guys have it. The base currency is going to be the euro. The counter is going to be the USD. And as you get familiar with Forex, you're going to see that some of these change. So you'll see the USD as the base, and then you'll see the euro as the counter, or you'll see the USD as the base and the CAD as the counter, okay? It varies from pair to pair and from the different currencies that you're going to be trading, but this is just kind of an example to kind of just briefly go over real quick so you guys understand what we're kind of looking at when it comes to trading, okay? So we have different types of pairs, okay? And I'm just going to briefly go over them real quick. This is something that later on in the course you'll go learning, and slowly but surely you go picking up on all these different pairs and stuff like that. Regardless, you don't need to know all of them because you're not going to trade all of them. I do have a video later on in the course that pretty much just helps you decide on which ones you should trade depending on what time of the day you're going to want to trade and stuff like that. But major pairs are consisted of any currencies that include the US dollar as the base or the counter currency. Like I was kind of saying earlier, that they could switch around whether it's as the base or the counter, okay? So you're going to see that now. And it also has to be one of the other 7 currencies when it comes to making a major pair, okay? Now, these major currencies are like the USD, the GBP, the CAD, the Euro. These are major currencies, okay? Now, I personally recommend everybody that's new to Forex to start with these pairs. Why? Because they respect you more. They move better in the market, and they're going to provide you with better positions to enter at, less risky ones, and it's just overall better for beginners. So then we have cross pairs, okay? Cross pairs are basically any of the other 7 major currencies except for the US dollar. So in this case, we're not going to be using US dollar anymore. Now, me personally, as you guys go on through the course and stuff like that, and if you guys already kind of know me, you guys know I only trade one pair, and it's a cross pair. It's GBP, JPY, okay? So the British pound against the Japanese yen. It's just one of my favorite pairs. It respects me so good, and I kill it every single day with it, okay? So you guys already know that. But other examples are the Euro GBP, the GBP CAD, GBP JPY, like I said earlier. Sorry about that. And the AUD Swiss, okay? So keep that in mind. Now, those are cross pairs, okay? Now we have exotics. Now, I tend to stay away from these. They're very volatile. They have a ginormous pip count that could blow small accounts in no time whatsoever. And personally, they're just not worth trading, okay? So I would personally just stay away from them. These are basically just the pairs that are not in the top 10. They include the Mexican peso, the Turkish lira, just a whole bunch of other ones. I don't really know them off the top of my head, but those are some quick examples right there at the bottom. The Euro Mexican, the USD Tri, USD ZAR, and the USD Mexican again. So yeah, those are just exotic pairs right there. Tend to stay away from those. Try to stick to the cross pairs and the major pairs, and you'll have tons of success. Again, at the end of the day, you don't have to trade all these pairs. You're just only going to have to pick a few. So here we have the bid and ask prices, okay? Now, this, when you open up your MetaTrader, you're always going to have two different prices, okay? At any given point in the market, a currency is going to have two different prices. We're going to have the bid and the ask, and I'll show you guys what these are going to look like on your MetaTrader as well in just a second. But the bid is the price where buyers get in at, and the ask is going to be the price where sellers get in at, okay? Now, the distance between your bid and ask prices is the spread, okay? Every broker has different spreads, okay? There's not going to be one broker that's going to have the same spreads. Why? Because they differentiate, okay? And that's not really important to know about. So when it comes to picking your broker, I always say try to find a broker that has the smallest spreads possible. And when you do decide to choose a broker, we personally use Hugo's Way over here on Traders Nation. But if you choose to decide on another broker, whatever the case may be, try to pick one that has a commission-based account or an ECN account. These accounts are the ones that are going to have these tighter spreads. And the reason behind these tighter spreads is just basically you're going to get better entries. You're not going to get stopped out early. And it's just overall better. Okay? Better exits, all that stuff. You're going to make sure that you're not going to miss out on nothing. And your trades are going to get out when they have to get out. And you're going to enter when you need to enter. Okay? So here we have a little screenshot of the MetaTrader 4 app. And you guys see the bid and the ask prices. The bid is going to be the red one. The ask is going to be the blue one. Okay? Super simple. Now, here we're going into pips. Now, pips is just percentage in points. It's basically how you measure or calculate the moves that a pair does in Forex, okay? Now, 100 points is going to equal to 10 pips. Okay, now this is going to be one of those things that you guys are going to have to practice over time, and it does take some practice, and depending on the different instruments that you do decide to trade, because we could trade more than Forex with our brokers. You know, we could trade metals, we could trade stocks, we could trade a whole bunch of things. So depending on what instrument we're actually trying to trade, your pip count is going to be, mathematically, it's going to change how you calculate these pips or these points. Okay, now, but for the simple, you know, just to keep it nice and simple and not overcomplicated right now, just remember 100 points is going to equal to 10 pips, and I'm going to show you that right now. Okay, so if we look right here, this is a Euro USD chart. Okay, we have the ticks right there, which is considered ticks on TradingView, but it's actually points. Okay, so just imagine those as points. 100 points is 10 pips. Okay, keep it nice and simple. And then the ticks at the bottom where it says stop level, again, 100 ticks equals 10 pips. So try not to get that, like, you know, confused. Just try to keep it nice and simple. So now this is how you calculate for just kind of every other Forex pair. Now when it comes to indices, when it comes to stocks, when it comes to metals, all that stuff, it's going to vary a little bit. Now again, if you guys have any questions as you're going through the learning process, whether you're going through the course that we offer or whatever the case may be, you could always send me a message. As long as you're like in the VIP chat and stuff like that, I'm open to like mentoring people a little bit, you know, with the spare time that I have. Now I'm really going to be focusing most of my mentorship on the people that actually buy the course, because those are going to be my actual students. But I still tend to help out in the VIP and help those people out as much as possible when I do have spare time. So keep that in mind. Now, try not to overcomplicate it. When it comes to Forex, when it comes to trading itself, try not to complicate things. Try to keep things as simple as possible so you could push through as smoothly as possible, okay? I'm going to tell you from experience, because at the beginning I tried overcomplicating everything and it just ended up confusing me and screwing me over long term, okay? So just try to learn the basics and slowly build up. Keep everything nice and simple, and you'll see how everything starts clicking. So don't worry too much about pips right now, how to calculate them, all that stuff. That will come with process and with the process of learning and, you know, practicing and all that stuff. So stay nice and calm. Don't get worried yet, okay? Now, here are some need to know things when it comes to trading. It's kind of just like some terminologies and stuff like that, okay? So when we say we're going long, that means we're buying, okay? When we're going short, we're selling. Just like sometimes we'll say the price is melting. When it's melting, it's going down, so it means it's selling. And sometimes we say price is skyrocketing. When we say it's skyrocketing, that means it's going up. Okay, now, lot sizes is going to be the size of the position that you are taking a trade on. So when you do go onto your MetaTrader 4 app to take your positions, or whether you do it on the MetaTrader app on your computer, you're going to have to pick a lot size. And that's basically how much you're going to bid into this position. Okay, now we have micro lots, we have mini lots, and we have standard lots. Obviously, depending on the size of your account, you're going to have to change your lot size. Now, I'll go over risk management in the future, and you guys are going to see videos in the future about risk management and all that stuff, which is very important when it comes to trading, so you don't blow up your accounts. But as a beginner, I'm more than sure you guys are only going to start with a few $100. Stick to micro lots, learn how to work the app if you're completely new to trading, and really practice how to enter positions, close positions, move your stop losses, set your take profits, set your stop losses, all those things. Okay, so you have to learn all those things first. So try to stick to micro lots just in case you do have losses and mistakes and all that stuff. They're small losses and don't really hurt you that much. Once you get a little bit more comfortable with setting your positions and stuff like that, then you can start upping your lot size, of course, as you up your account balance, because you do need more balance to go up in lots. You can't run a standard lot on a $100 account, but you can run a micro lot on a $100 account. Just like if you have a $100,000 account, standard lots is what you're going to have to be running. You're going to have to be running 10 standard lots, 11 standard lots, whatever the case may be, depending on the trade. Okay, but again, this is something you learn with time. Don't worry about it. It'll come with the process of learning, okay? Now, here are different types of orders. I'm going to start from the bottom just to keep it as simple as possible. But market execution, this is pretty much what you're going to be using most of the time. And it's pretty much just orders placed at the current price, at whatever price that certain instrument is at, okay? Then we have sell limits, sell stops, buy limits, and buy stops, okay? Now, I'm not going to read it here so I can show you this chart, because this chart explains exactly what these things are. So starting at the top left, we have buy stop, okay? So it's just an order that's placed above price, and as price keeps going up, you enter into that position, and then it continues up to hit your take profit, or if it fails on you, it goes back down and hits your stop loss, okay? Then we have buy limit. Buy limits are just orders placed below price. So as price is going up, it comes down. So it makes kind of like a lower high type deal thing. Hits your entry and then continues up, okay? Or goes down and hits your stop loss. It could always happen, right? Then we have at the bottom left, we have sell stops, okay? So this is just an order placed below price, and as price keeps going down, you enter into that position, and then it continues to your profit, okay? Then we have sell limits, where it's price going up, hits that entry for you, and then price crashes back down, okay? So these are all the different types of orders that we have, alongside with market execution, like I went over earlier. And you probably won't be using these if you're taking our signals. If I'm going to be honest, you probably won't use them at all. But it's something to keep in the back of your pocket for when you do start trading by yourself. Depending on your strategy, you might be using some of these, okay? So keep that in mind. Now, final slide, okay? Risk management. Risk management is super, super important. By far, I think, honestly, in my opinion, one of the most important and crucial things when it comes to trading, okay? And I'm going to fry this into everybody's brain from the beginning. I want everybody to understand risk management properly, okay? So risk management is not going to depend on your lot size. Most people have the misconception of like, hey, if I run a 0.01 all the time, that's risk management. It's not. It's not, because let's say you run a 0.01 on GBP, JPY like I do. Well, I don't run 0.01s, I run more than that. But let's say you run that lot size on JBP, JPY, it's not going to equal to the same thing as if you run it on NAS or if you run it on gold or something like that, okay? The value is different. So you're going to lose more off of that gold position or that NAS position than you are on that JBP, JPY position, okay? So that's something to keep in mind. Now, the way around this, and this only works for Forex Pairs, this app, but you go ahead and download Stinu from the App Store, okay? It's right there on the screen. It says STINU. Okay, you're going to download that. And basically, that app is going to help you with this risk management. You put your account balance on the top. You put how much you're trying to risk percent-wise, or you could put amount-wise if you want to do it like that. And then basically how many pips your stop loss is going to be. And then it gives you what your lot size should be for that position, okay? Now, me personally, I wouldn't risk more than 5%. But I wouldn't go lower than 1%, okay? You could risk lower than 1% if you want, but it's pointless, to be honest, because you're not really going to be gaining that much on your trade. So I would stick to 1 to 5% max when it comes to your risk. And then try to take setups that only have a 1-to-1 risk to reward and up. Now, why do I say this? Risk to reward is very important, because if you're taking a trade with a negative risk to reward, that means you're risking more than what you're potentially going to make. So like, let's say, to put it into numbers, let's say you're risking $1. If you win the trade, you're only going to make 80 cents. So then why are you putting $1 on the line if your return's only going to be 80 cents? That makes no sense. So you want to make it so that your potential loss is $1, but your potential gain is at least $1 or higher. So obviously the goal is to make it as high as possible. So we're always looking to make our risk to reward as high as possible. So me personally, I always try to go for a 1-to-1 or up. Usually I'm like at a 1.5. So let's say I'm risking $1. Usually my trades will give me back $1.50, $2, maybe $3. Okay, that's usually what I try to aim for. Now, that pretty much ends the what is Forex kind of intro to all of this, okay? And hopefully everybody kind of understood what's going on. If you have to go over it again, go over the video a million times. Regardless, you guys could always contact me, whether it's on Instagram or through Telegram at Anthony Hernandez FX, okay? Anthony Hernandez FX. either on Telegram or on Instagram, whatever it's easier for you guys. So I know I should have done this from the beginning, but I forgot to introduce myself at the beginning. My name is Anthony Hernandez. I'm going to be the educator for Traders Nation. I've been doing it for a few months now already. People love what I've been teaching them. People have learned a lot. And I even have a few students that are already trading by themselves on top of taking our signals. So I hope to be able to do that to every single one of you and make you guys all profitable traders, and being able to transform you guys from beginners and not really knowing nothing at all to being your own trader, okay, apart from taking our signals. And that's always been the goal. So yeah, just want to leave it at that. Enjoy the signals, enjoy the videos that I sent, enjoy the course when it does come out, and yeah, that's about it. See you guys in there.